A reminder, in October 2008, the ASX S&P A-REIT 200 index collapsed by 75% from peak to trough. It was the largest crash in Australian listed property trust history and one of the largest crashes at the time for 2008 worldwide. The correction was larger than the global REITs. Some of the well-known names such as Centro and Valad completely disappeared. At one point in time, essentially funds management businesses within these trusts were valued at nearly zero. Now, eventually there was a recovery, but the truth was that many investors who tried to pick up on that recovery were diluted to the nines. And the reason why was that the banks were forcing many of these REITs to raise capital to survive. And so in terms of a real recovery, it really actually wasn't that much for investors to begin with.
Thanks. A general comment on the veracity of across the board published NTA values for a lot of and do you think they've really been tested in terms of asset sales?
No, is the answer. Okay, so we've seen the valuers just creep up the cap rates, and they do this every cycle. And look, I can understand why they do that. They wish to be conservative. They don't want to jolt the market. But it's pretty clear to me when I've looked at, say, for example, the risk-free rate, the 10-year bond yield, versus the cap rates, okay, there's still quite a gap there. And so I believe there'll be yet another round we'll see in June, where we'll probably see another 20 to 30 basis points. I know there are some fund managers out there who think we're at the top, but if I'm right that the outlook for distributions on office, if I'm right about that, cap rates will need to keep going up because the risk premium will need to rise, given a negative outlook in rent. So just keep that in mind.
Yeah, just probably the final question. There's obviously a deep correlation between interest rates and the gearing, and obviously we explained that.
Yeah.
So as a side point, and I mean everybody probably asks you this and you're in the fin review every second day, but what's your outlook for interest rates for the rest of this year, calendar 24? Because there's...
You're speaking of the cash rate?
I'm speaking of the RBA cash rate, yes. Which impacts on what we've just you've presented.
Okay, well, look, just my opinion, I don't think we'll see a rate cut soon. Maybe second half of the year. We need to think about the CPI basket itself and what's driving that CPI basket. And one factor which I look at very closely, of course, is residential rents. That's the single largest contributor to the CPI basket. The ABS has been a bit dovish on rents, put it this way. They reckon rents over the last 12 months have gone up by 7.5%, but I know market rents have gone up by 13%. And indeed, over the last 3 years, they're up by about 35%. That's going to feed through into their series on rents sooner or later. It has been feeding through, but it will go up. And so that's going to probably keep the CPI somewhat elevated, in my opinion. So, of course, there's many factors that could happen out there. We could go into recession. Then they probably would cut. Sure. But I just don't believe we're going to get that rate cut prior to mid-year, put it that way. But that's just my view.